Good afternoon. It is 4 p.m. here in Singapore, and welcome to the Asian Banker Live. Today, we're discussing the rise of ICOs and the future of cryptocurrencies. Cryptocurrencies have been touted as the next big thing in finance. Despite experiencing probably one of the biggest valuation bubbles since the dot-com era, its prospect is still uncertain. It is still generating a lot of interest, and potential investors aren't about to back or shy away because they cannot afford to miss out given the potential, especially with the interest in blockchain, which in many ways have been connected with the discussion about ICOs. 2017 has been an eventful year for cryptocurrencies. Dominating the news recently has been the exponential growth in initial coin offering or digital token or initial token offering, with companies raising over $1.2 billion in funds during the first half of 2017. Explosion in Bitcoin and Ethereum or Ether prices, raising their market valuation to new heights, and the recent split of Bitcoins resulting in Bitcoin Cash. ICOs are emerging as cryptocurrencies' next big risk money makers. It has rapidly emerged as a democratic, transparent, and frictionless way of crowdfunding of modern digital companies, surpassing venture capital funding this year. In today's session, we'll be focusing on three areas. First, the key emerging trends in ICOs, the recent spurt in growth, risk, and the impact of new regulation. Next, we'll look at the steep rise in prices of Bitcoins and Ether, what the key trends and reason behind these movements, and finally, the future outlook. Where is the industry headed? To do this, we're happy to have as part of our panel today, Mike Kayamori, co-founder and chief executive officer of Quoine. Mike has a career spanning 20 years in senior position in Mitsubishi Corporation, GlobeSpan Capital Partners, and SoftBank Group. He co-founded Quoine, which today is one of the leading blockchain and cryptocurrency companies in Asia, together with Cryptocurrency Exchange. He is based out of Tokyo in Japan, and Japan is one of the countries that have national level regulation for Bitcoins and cryptocurrency exchanges. Next, we have Igor Pesin, fintech investor and partner at Life.Sreda. Igor is a partner and investment director at Life.Sreda, a global fintech focused venture capital fund headquartered here in Singapore. And finally, we have our very own Niti Agawa, our senior research manager and head of technology research, and she'll be sharing some of our research insight into this topic. Now, before I call on Niti to do her presentation, let me just share with you how you can participate in this session. You can do so by sending us your question, and you can type your question into the chat box at the bottom right corner of the WebEx screen. Okay, now, Niti will start us off with a presentation, give us a quick overview of the key developments and trends in ICO and cryptocurrency. Niti.
Great. Thank you, Bonpeng. Good afternoon, everyone. I'd like to quickly share with you some key trends in initial coin offerings and cryptocurrency market today. Okay, so if you see, more than 1.2 billion was raised through ICOs in the first half of 2017. Now compare this with the 300 million, which was raised in previous 2 years. This outstrips the venture capital investment in blockchain, and in fact, 600 million was raised in just 1 month alone. These companies raise money creating network effects previously not seen in traditional funding modes such as IPOs. The craze is creating new hype. Take, for example, Tezo, that raised 206 billion. Banker raised 150 million within 3 hours, and 10x raised 80 million in just minutes. Okay, so what are the reasons for the popularity of these ICOs? ICOs come with inherent advantages as they provide efficient and low-cost funding to startups, and they're accessible to any participant across any geography. Often it is a nightmare for a new company without track record to raise funds using traditional funding options, but ICO make this readily possible. It provides an opportunity to invest and gain from disruptive blockchain technology projects, and also allows the participants to diversify their current exposure in cryptocurrencies, besides providing the liquidity that as these coins can be traded after the launch. The growth of ICO is also associated with the surge in prices of Bitcoin and Ethereum, two most popular digital currencies used for purchase of these tokens. Most of these ICOs are based on Ethereum. Of course, that also adds to the volatility of Ethereum prices. In fact, over the last 1 year, we've seen Bitcoin rise by 450 to 500%, and Ethereum rising by 2,400% in last 1 year. The market cap has crossed 100 billion, and in fact, this could rise further as the network effect kicks in. In countries like Japan, we're already seeing some mainstream penetration of Bitcoin. It's being accepted as a legal tender now. There's cryptocurrency exchanges that are available. And it's also even being used as a payment mode in stores. So the acceptance is increasing of these cryptocurrencies. But the risk associated with ICOs, that still remains high and needs to be cautiously weighed. The projects raise huge sum without a proven product or a real utility to the underlying token. The industry could face frauds with companies taking advantage of excitement in social media. There are uncertain regulations, lack of enforceable consumer protection, possibly resulting in significant losses without recourse. Lack of transparency also remains a key concern. Cryptocurrencies by their track record have been volatile and speculative in nature, so investors definitely need to be more judicious when they are investing in these new offers. Now, till recently, they were completely out of purview of regulatory oversight. But as Boonping mentioned, the regulators are waking up now. Now, MAS has stated that they will be regulating these tokens as under Securities and Futures Act. And it also pointed on the risks of money laundering and terrorism financing through these tokens. Security Exchange Commission in US has also clarified that they would be considering many of these ICOs as to be regulated as securities. We're probably going to be seeing more regulations coming in future. Now, if I were to just sum it up all quickly, the impact of these and possible future regulations could be in weeding out of smaller companies intending to make quick bucks and bringing stronger companies and investors, and also possibly greater compliance to the market. Now, many smaller companies will die, but the survivors could be the ones to redefine their industries, probably as we saw in dot-com era. The market is still evolving rapidly. The future could see more professional players, such as institutional investors, venture capital funds, and technology platforms enter the market, bringing greater stability and maturity to this crowdfunding platform. With that, Boonping, I want to end my presentation. Over to you.
Okay, thanks, Niti. Before I call on Igor to share some more insights on ICOs, perhaps one question for Niti. Who are issuing these ICOs now, and what kind of investors are investing in them? And we are cognizant of the risk. And how do investors know about the underlying projects that are tied to this ICOs?
So yes, it is still a largely social media driven to a large extent in terms of information about the projects. Most of the projects are being are by new companies that are blockchain based companies coming up with new services and with very little track record to talk about. So some of them are actually just they have initial coding in place or a few documents in place, and that's the where we were talking about the risk level. So new companies that are looking to invest, looking to build projects on blockchain, they do have an idea, they do have a plan in place, but not really a product in place. And most of the promotion is done through social media, and that's where the information is being flowed through.
Okay, and the kind of investors that are investing in them, they tend to be the more accredited investors, more knowledgeable ones, with higher amount of.
No, not really. We are not seeing too many institutional investors in the market right now. More of retail investors. Some venture capitals are looking into entering into this segment now. But big institutions, no, not yet.
Okay, great. Thanks, Niti. Okay, next we're very happy to have Igor from Life.Sreda. And so we're going to get from Igor's perspective on ICO as a investment platform or investment channel. How does it compare with your more traditional and conventional venture capital? Igor, if you can share with us your insight.
Thank you, Bunpin. And actually, I will comment on your question regarding type of investors which invest into ICO companies. So let me please switch to my presentation. Okay, yes. So I will talk about ICO from the investment perspective, and I actually will raise some questions and topics which people try to avoid today, and mainly about risks and problems of ICO market. So just a very brief introduction of myself and our company. So we are fintech fund, as you mentioned. We are based in Singapore. We are investing into fintech from 2012, and we have invested into 23 companies worldwide. We are based in Singapore, and so here is our headquarters. In 2016, we launched our based on blockchain fund, and that is why we are quite deeply involved into blockchain industry, but not into ICO market yet. However, we have such plans. So this weekend, probably you know that will be so-called the money fight in boxing between Mayweather and McGregor, which is the budget of this boxing fight is $600 million. But the real money fight of this year is actually on ICO market, which is for today helped many companies to raise more than $2 billion. But the difference between these two shows that on the boxing match will be participating professional boxers who has like track record experience, who raised a lot of money before, and on the ICO show we have like new companies which maybe have great ideas, great plans, but they are very new to the market. They have no recognition and no traction, and that is big difference. And next picture is like comparison. So this is like how these ICO companies would look on the boxing match. It's or like investors. So this is the difference. They are very new, young, and unprofessional. However, yes, so we cannot avoid this market. It's really big, dynamically high. For example, on these slides, I have investments that have been done into blockchain before ICO. You can see that the highest mark was 60 million invested into Circle, or 55 invested into Ripple. Today, we have 200+ million investment rounds into several companies. And ICO changed dramatically investment industry in the blockchain space. My forecast, and today, let's say like a few months ago, it was maybe 10, 12, 20 companies going to ICO. Today we have hundreds of companies which are listed on ICO market. Today is almost 400 ICO companies on ICO. However, my prediction that the market will be cooling down till the end of this year, and because it was like a hype, it was a lot of attention, but now there are many companies with different quality, and people will, let's say, be more cautious about this kind of investments. However, next year potentially the market will go up, and that is because new players, new institutional investors, sophisticated investors will enter this ICO market. And actually, it's already a big industry. It's not like, like few players. It's different companies, consultants, lawyers, funds, different research groups, and has already entered this market, and that is why it's the whole standalone industry. And it seems that ICO is good for every participant, for founders who can raise a lot of money within days, for investors, conventional investors who can invest $1 or $10 into startups, which is not possible with traditional blockchain companies. And it's even good for cryptocurrency community because a lot of initiatives, a lot of projects, competition, it drives the development of the industry. But today we have many really significant problems on the market. All of these companies were not able to raise money from traditional investors, not because investors are like stupid, but because actually many of these companies are not ready to get this money and to use it in a proper way. And I don't even talk about scams, I don't talk about fraud, I just talk about unprofessional teams which raise too much money that they actually don't need or which they will not spend in a good way. And actually, we already see these problems on the ICO market. It's just the beginning. You know, like some of companies was hacked, ICO campaigns was hacked. This is just the beginning, but we already see these problems visible. But risks are not only about hacking or you know, like it's ICO market has much more risks than venture capital industry itself, because here we have a lot of risks in legal field, in regulation field, a lot of risks related to tech development, how tokens are built, and this is actually not possible for every investor, every person to understand and analyze all these risks. It can be done only by professional investment teams. And ICO, it's not, you know, like a pill. Everyone thinks that ICO changed the investment industry. No, it's not. It's just a new tool which has a lot of advantages, but which also has a lot of problems. And this tool should be used by professional investors. And that is why my statement is very simple. ICO is not, many people today tell that ICO like will replace venture capital investors, but I would say that if venture capitalists will not come to ICO industry, this industry will die because of too many problems which will be visible very soon. And that is why venture capital funds should enter this market. And that actually it already happens. As you can see, today maybe there are about 12 venture capital funds which started to explore this opportunity of investment through tokens, through ICO. And this is just the beginning. More and more funds and more investors will come to the market. And it has a lot of benefits for all investors because these professional teams are able to make a proper due diligence, proper investment analysis, proper value creation after investment. Because, you know, today companies raise a lot of money, hundreds of millions of dollars, but after they raised, everyone forget about this company. Nobody really helped this company to run their business, to make this company successful at the end of the day. This is what venture capital funds will bring to this market. And from the other side, I think that ICO market is interesting for venture capital funds because it has more liquidity, as it has, you know, like the biggest pain of venture capital funds, of investments into venture capital funds is that once you invested, let's say, $1 million into venture capital funds, you can forget about this for many years. The money are frozen in this fund. But ICO provides a lot of liquidity, which is actually very good for venture capital funds. Our team and our fund is exploring our ICO opportunities for ourselves through our BB fund, which is blockchain-oriented investment entity, and potentially we will be active on this market next year, and we have a lot of interest from different investors who need this kind of player, investors who does not want to to analyze all these hundreds of companies, but just invest into the fund, and the fund will do this work instead of them. And from my point of view, existing funds which are already on the market do not have very good terms for investors, and that is our target also, to try to make it very transparent, very clear. All fee structure should be convenient, comfortable for investors. That's it. If you have any questions regarding the investment into ICO market, please go ahead.
Great, thanks, Igor. Really like your presentation and the many points that you raised. So ICOs, because of the network effect, they are able to raise a lot more funds and in a shorter period of time from what you show us as compared to traditional VCs. But you are also citing a number of potential risks and problems in terms of the underlying business that people are investing in terms of whether they are running a proper or how good their businesses are in terms of whether they are proper financial reporting or accounting for, and so on and so forth. But you are also saying that venture capital players like yourself are also looking into entering this area, and potentially you will make them safer, better run?
Yes, so that is our actually job. It's a day-to-day job. Investment is day-to-day job. You have within your team, you have people who know legal part, who know tech part, who know financial part, who know market, who has strategy, investment strategy, and you have to spend all of your time. It's actually much more than 8 hours a day. It's like 16 hours a day, and you have to spend this time for each company. It's impossible to make investment decision based on spending 20 minutes to read white paper of ICO company, and that's it. It's impossible to make the right decision in this way. Only if you want to play some kind of speculation game, but it's not our job. And the speculation hopefully will leave this market soon, because it's investments into startup. It's not about speculation at all.
Right. Okay. Now, ICOs and a lot of this startup, they operate in the marketplace platform of crowdfunding platform, where it is, they are connecting the businesses to individual investors on a really kind of private basis. How do you regulate them in this borderless world of the web?
So again, from my point of view, there is no difference between ICO startup and traditional startup.
Right.
Regulation. So these kind of platforms, they can provide some information for you, but when you make investments, it's not only you can use this kind of crowdfunding platforms, but you need to understand that nobody will guarantee you investment return, and most likely you will lose this money. Or if you are a professional, sophisticated investor, potentially you can do it as good as funds, but usually not, because fund, it's not like just a wallet. Fund, it's a number of people with different skill sets which can do this kind of investment job much better than just crowd.
Okay, great. Okay, I'd like to bring Mike into the conversation. And Mike, one of the things that Igor mentioned in terms of the attractiveness of ICOs is potentially they will have a higher level of liquidity than traditional form of investments. Do you agree? Do you see that?
Yeah. So I must respectfully disagree to Igor. Being a VC myself for 10 years and also an entrepreneur for 4, the best and brightest entrepreneurs will take the ICO route. A non-equity, non-security token route, especially if you know or if you have confidence that you can raise capital without dilution, without preferences, without voting rights, without all these strings attached, they will raise it through a token sale. So yes, VCs will compete with these retail investors who are able to come in these token sales. And I wasn't sure if anybody really addressed who are the existing investors right now participating in these token sales. Essentially, there's roughly around 10 to 15,000 crypto millionaires. These people, the average net worth is over 10 million. And some even have more than 100 million individually. And they are crypto millionaires through Bitcoin and Ethereum and other token sales. They understand that there's risk, but they fund the craziest ideas. They know that only maybe 1 out of 100 is going to make it, but that company could become 100 billion, right? So it is going to happen. It is disrupting the industry, right? But I think institutional investors, there's always a way to play. So traditional VCs are building ICO funds, crypto funds, and they will compete to invest in the companies. Any company, any startup, there's always risk. So it's all part of disruption. But and the market is large enough for many people to come and play. But if I were an entrepreneur who has confidence in myself, I will do an ICO or a token sale.
Right. Okay. So Mike, you're saying the investors are these crypto millionaires. How much of it is kind of this big wealthy individuals, at least on the crypto assets front, versus the retail individual investors who need some form of protection?
Well, so right now, the only way you can invest in these token sales is if you have Bitcoin or Ethereum. And most institutional or most mainstream people do not have access, or they don't have Bitcoin or Ethereum with them, right? So only recently in the U.S. where there's these Filecoins and Kick who are allowing investors or purchasers to invest with fiat. But until those two, the only way to access is you need to have Ethereum or Bitcoin. And that's why it has always been limited accessibility to the retail investors. It was only for people who were involved or who purchased cryptocurrencies early, and they have a lot of unrealized capital gain, which they're willing to fund the next big project.
Right. So, the two dominant cryptocurrency being used to fund these ICOs, you mentioned Bitcoin and Ethereum. I understand that there are also other cryptocurrencies in the market. What's the potential of this being currency for ICOs?
Yeah, so it boils down all to liquidity, right? The reason why these token sales they accept Bitcoin and Ethereum is because there's liquidity in these two cryptocurrencies. And because they need to pay their suppliers, they need to pay their salaries, they need to do marketing. And the reality is with all these hundreds and thousands of new tokens that are going to be issued over the next 2 to 3 years, they're all going to have liquidity challenges. So what I look from an industry perspective is liquidity. When you look at the financial crisis in the past, essentially there's a liquidity crunch. And with all these tokens that are coming into market, without liquidity, it's going to be volatile. And when it's volatile, it's going to be very difficult for the token economy to prosper.
Okay. I want to get both your and Igor's perspective on this. Is this now the best time to invest in ICOs, or for the investor, should they wait for a couple more years with the possibility of market saturation? Obviously, it's also dependent on the kind of investors, right? Whether you are a retail, a kind of high street investors versus a kind of more sophisticated, credited investor who can take more risk, someone who can kind of invest in a venture capital, for example.
So I can start. Oh, go ahead, Igor.
No, please go, Mike.
Yeah, so it's very similar to VC, right? When there's a hype, there's hype curves, and as a VC, what you do is you continue to invest in the companies you believe in. So there's no right period or wrong period, right? So, like for example, when Google raised money, it was the top of the hype curve, and they were like the 10th search engine that came, right? So. And then there's companies that were funded during the dark days after the bust. So the right time to invest is when you believe in the company, when you believe in the management team, and when you believe in the opportunity. That's when you invest and you participate in ICOs.
Okay, great. Igor, what's your perspective?
So it's exactly my thoughts on it. So for example, regarding our fund, we still plan to invest into fintech related companies, but which are tokenized, meaning that and also very agree with Mike's point that liquidity is very important thing, and actually there is no much liquidity right now on the market. Our aim is to invest like into, let's say, mid-term or long-term, with mid-term or long-term plans. So token is just a tool, just a, I would say, very good mechanism to invest, but it's still, companies are the same. They solve the same problems and they address the same clients, markets, etc. So yes, today is the right moment to invest into good companies, and in 5 years it will be also good time to invest into good companies. But what I see right now, that many companies came to the market designed specifically for ICO, and I would be very cautious about such companies which do not have like a proper product market fit, who do not have like a long-term strategy, and that can be dangerous because tokens are not liquid, many of them, and those who plan to speculate can face liquidity problems.
Okay. Now, one area that is of interest, obviously, is in the prices of Bitcoin and Ethereum, right? The Ethereum currency, fueled by all this prospect of Bitcoin. Now, what do you see of the volatility with the emergence of ICOs and the acceptance of ICOs? Do you think that the fear about a bubble or in the instability of the currency will be somewhat abated with ICOs?
I can explain, or I can give my thoughts. So we've been operating an exchange for the past 3 years. Early this year, when the price of Bitcoin was $1,000, right now it's $4,000. Early this year, on January 1st, it was around $1,000. People said it was a bubble. Last June, when it was about $500, people said it was a bubble, right? So it's very difficult to define or say that it's a bubble or not. It's always hindsight. Some people say one Bitcoin could become $500,000. Some people say there's no underlying residual value. It's right now it's purely supply and demand speculation, and because there's no advanced derivative products like options, like futures, like swap, that the volatility cannot be hedged. So it's still very early. And when these financial instruments and products and like ETFs and until the entire ecosystem evolves and matures, it's still going to be volatile. But when you look at it from February 2014, when Mt. Gox happened, and when you step back and look at the chart, it's been continuous rise of the price. I mean, short term, there's a lot of volatility, but when you look at it long term or medium term, it just continues to go up. That's Bitcoin. And you cannot categorize or bundle Bitcoin with Ethereum because Ethereum is closely correlated with ICOs. 95% of these token sales are now based on the Ethereum ERC20 token standard. And when these startups raise money through these token sales, they use Ethereum. And they need to make sure that it's what do you call it? Not pegged, but you have the allocation in Ether. So the price and rise of this ICO is directly influencing or taking an effect on the price of Ethereum.
Right. Okay. So the rise and fall of ICOs will impact Ethereum and Ether more than Bitcoin. Is that can we infer or?
Yes, you're absolutely correct.
Right. Okay. Now, cryptocurrency, as you mentioned, a lot of the investors in the ICOs today are, cryptocurrency millionaires. So it still operates in a very kind of defined space. Now, Japan is one country where cryptocurrency regulation is kind of introduced at the federal level. You have Bitcoins, all cryptocurrency being used as for retail transaction, for example, at physical shops and so on. Now, when will it move from this rarefied field where only a few can access it to becoming more mainstream? Which country will achieve it first? Will it be like Japan or some other countries? What are your thoughts?
I am absolutely confident that it will be Japan. Japan, as you know, is the largest retail FX market. So per capita, the retail FX is largest in the world. Also, there's a big loyalty points ecosystem, these coalition points program, like similar to these airline mileages or hotel points. Japan, like every industry or every company has its own loyalty points. And essentially, these are a type of store of value. So when you combine those together, it's almost like a Bitcoin, where it's digital, it's store of value, you can use it, you can redeem it, you can pay it, and you can invest in it, you can buy or sell. So when you look at it, it's a perfect storm. It's a place where Japanese people are familiar. And that's why the opportunity for exponential growth is in Japan. And that's also the reason why the Japanese government, the Japan FSA, the Federal Financial Service Agency, has passed the bill last May, and it's in effect this April.
But aren't there some number of factors that work against it? Like you have an aging population there, and it's still a very cash-based economy. especially on the retail side, right?
Exactly. So the people who are buying it are not the aging society. I mean, this is too foreign to them. So it is the actual like retail FX users or customers, the so-called Mrs. Watanabe. These retail FX investors are the ones who are coming into cryptocurrencies. And when the Mt. Gox incident happened in Japan, actually there was maybe only 3% of the Japanese people were customers of Mt. Gox. It was actually global customers, but it brought awareness in Japan. So since the Mt. Gox was actually a catalyst for the retail FX users to come into Bitcoin, and when you look at the growth of price, almost everybody has capital gains.
Right.
And what they're doing is once they start making money, they want to start using it. So there's a positive spillover where, wow, my Bitcoin or my Ethereum has gone 10x, 20x. Where can I use it? So now there's a lot of wallet companies who are partnering with electronic stores, retail shops, restaurants, allowing people to use their Bitcoin or Ethereum for payments. So there's a positive spillover and network effect that is happening right now.
Okay.
Sure, just a question, Mike. Okay.
Yeah.
Mike, what do you think about Japan as the capital for ICO, for new tokens, new currencies?
Yeah, so that's a great point. So the SEC has given their thoughts. The MAS has followed. The FSA still has not. So I think they are struggling to what extent they should regulate it. So obviously, if it's a security, it will fall under the Securities Act, and that's a given. So, but I think that what the Japanese government is contemplating is should they go further, right? So obviously, that is something they are actively studying right now, and I believe and I think they will take a little bit more time than, for example, the MAS or the SEC to give their official statement on ICOs.
Right. Okay. We talk about a few issues that kind of impinges, right, ICOs in terms of wider involvement or participation, and this relates to the concerns about how fraud can be perpetrated, money laundering, and to protect investors, obviously regulation, as you mentioned, MAS and the FSC in the US. How do you expect this to shape the industry going forward?
So I'll give my thoughts. So that's a fascinating question. So obviously, what's going to happen is if it's a security, if it looks like a security, if it smells like a security, it's going to be deemed a security. So that's a given. The other elements that you mentioned, right? How do you prevent fraud? How do you prevent these fake coins or money laundering or these crime organization building a beautiful landing page, a white paper, and a video? There is no way to prevent that now, unfortunately. And the only way is for the investors or the participants to learn it the hard way. So there will be an opportunity for professional institutional investors and VCs to play a significant role in the ICO market as well. But and these investors will probably do much more deeper due diligence, management team, reference calls, all of these things. These crypto millionaires will probably be much more like easygoing. They actually fund. The crazier the idea, the more they fund, because I mean, the whole reason why Bitcoin came to prominence was after the financial crisis in 2008. Right? Bitcoin was 2009. It was anti-government. It wanted to decentralize many elements. So a lot of the token sales or ICO now are all talking about they want to create the decentralized browser or decentralized FRB. So they're trying to create all these decentralized things without a white paper that's peer reviewed, right? So it's always going to be there. There's no way to weed out the good ones with the bad ones. And even with the right intention, there's always product development risk. There's a product market risk, and then there's a scalability risk. So the best VCs in the world, like the Sequoia Capitals of the world, still 80% of their companies fail. Right? So it's just going to be, it's just part of a startup ecosystem where there's going to be a lot of startups that will fail, even with the right intentions.
Okay. Now, what we've been discussing in terms of ICO, you mentioned Bitcoin and blockchain being developed as an alternative almost to former arrangements, so to speak, following the financial crisis. Today, ICOs are still evolving, and it kind of exists outside of former capital markets. Now, do you see, and it's got its own separate ecosystem as well, where do you see the two at some point coming together, or they will kind of be separate alternatives? Do you see the former capital market, we mentioned the VCs and all, how do you think this will play out?
Yes, I'm very clear that
players get involved.
Yes, I'm pretty confident that cryptocurrency and tokens as an asset class is already in the process of becoming mainstream. I see a lot of institutional investors, hedge funds, family offices registering with our exchange to invest in crypto. And these people are also investing in ICO funds. So they're all coming in. Maybe not the Fidelities of the world, maybe not the large banks, or they're not in yet, but it's already starting to happen. And with the maturity of the token in the crypto economy, it's just a matter of time.
Okay.
I would just add. Yeah. So from my observation, yes, it has already started. So I see a lot of interest from many, let's name them as institutional investors, but not like banks, not like big funds, pension funds, but different financial holdings, different high net worth individuals. They are coming to us asking about the market itself and our prediction regarding this ICO market, and should they go and invest or to work with us and with different funds. And I mentioned during my short presentation that next year will be the time when big players, big institutional players will enter this market, because yes, asset class tokens are promising instrument for investors, and this is the new economy, this is the new industry, and it has a lot of potential and just a lot of interest from different people from different industries. So yeah, it already happens. It's not the future, it's today.
Yes, and adding to Igor, right? For larger institutions to come in, the crypto market cap is still around 140 billion. Right? It's only 140 billion. Yes, that is a lot, but it's smaller than Apple, Google, Amazon, or any of these, right? So there needs to be liquidity. There needs to be a robust secondary exchange. So all of these things, it's still very early. That's why, as an exchange, it's an opportunity for us to expand our offering. So, us as an exchange, we have a regulated exchange that's an exchange between fiat currency and crypto. But then it's still in public beta, but we have a crypto-only exchange where we are opening up to all tokens, all non-equity tokens. And we're going to create an exchange where all these participants can come and to bring all the liquidity silos together. So the ecosystem still needs a lot of growing up to do, and hopefully we can help that out.
Right. Okay. And obviously, the devil is in the details in terms of how do they get involved? How do they better integrate? Whether it's cryptocurrency or exchanges that you operate. I'm sure you talk to the large banks and the more traditional players as well. Where do they get started? Obviously, a platform like today's session is one.
Yeah, so it's actually very similar. Like in the crypto space, there's no like Goldman Sachs. Like there's no institutions or people who provide like prime brokerages, right? So who can lend credit, who can do fiat management, who can move capital, and who can like aggregate liquidity. All of these things are absolutely necessary for this industry to grow. And I'm not trying to market our own company, but we are launching a prime brokerages service. So for institutional investors who want access to multiple exchanges that are located dispersed across the world, there's a need to move fiat, or there's a need to have a lending facility. If they want to short a certain token, where can they borrow that? All these things will be necessary. So as an exchange, we are bringing all these services together that will essentially, the result is liquidity. And from my perspective, in order for institutions to come on board, it's a classic chicken and egg. There's going to be enough tokens in this ecosystem. It's all about liquidity and how institutional investors can come in and participate.
Okay, great. Obviously, this is Igor, go ahead.
Generally, I agree that banks, let's talk about banks, can come to this industry, but from my observation, based on from 2014 to 2016, blockchain industry itself was underfinanced. So if you look at the size of investments into blockchain, it was like 2% of the whole fintech market. And Mike's exchange is, I think, the most funded blockchain-related company in this region. Yes. So
yes, correct.
And I think it was quite difficult to raise money for you, because blockchain is not under radars of this kind of players like banks, and that is why I'm not sure that they will be fast enough and interested enough to come fast to this industry if they did not invest into blockchain startups before, which was quite, I would say, complementary technology for all banks.
Okay.
So that is,
yes, it's interesting. Yeah, so like I've been in this space for 4 years. We founded this company before Mt. Gox. When we launched our service 2 months after Mt. Gox. I couldn't even open a bank account. I mean, as our company, we couldn't open a transactional bank account. If I go and say we are a Bitcoin or a cryptocurrency exchange, traditional finance thought we were money launderers, right? We were criminals, right? So, but then people started talking about the underlying technology of Bitcoin, which was blockchain. So 2015 was the era of blockchain. And then it evolved. People were saying, like, why do you need a block? It just needs to be distributed. So in 2016, it became the distributed ledger technology. And
Right.
when you go to conferences, people will tell me, don't even talk about cryptocurrencies or Bitcoin because people will perceive that negatively. It's amazing how 2017, it's now all about cryptocurrencies and tokens and the token-based economy. So these things evolve. Like last year, today, people didn't even know what ICO was. Like 3 years ago, Ethereum still wasn't like in existence, right? So it's innovation and technology is moving at a speed where regulation is very difficult to keep up. But there's a lot of institutions who are looking at this as an opportunity where they might allocate 5%, 10% of their asset into this emerging industry. And for those people, unless they build their own like crypto expert or crypto investment team, they will go to people like Igor or go to like these crypto funds, allocate a portion of their capital for these people to invest in. So it's really starting right now.
Okay. And there's a real need for some of the more traditional institutions to create that capability in understanding and in operating in this whole cryptocurrency area. And that's something for them to continue to do and educate themselves. Now, for those who want to listen to today's sessions again, that will be available on the Asian Banker Tab Live website.